Indian stock market soared to a new height on Tuesday, driven by a significant surge in metal stocks. The Nifty Metal Index jumped 3% with all 15 of its constituents closing in the green. Shares of Nalco led the pack, rising by over 6.5%, while Tata Steel, Hindalco, Welspun Corp and NMDC also posted impressive gains of over 4%. Now, what's behind this rally? Well, it's all thanks to a series of economic measures rolled out by China aimed at breathing life back into its economy. One key move came from People's Bank of China, or PBOC, which announced it would cut reserve requirement ratio, or RRR, for banks by 50 basis points. But what exactly is this RRR ratio and why does it matter? In simple terms, the reserve requirement ratio is the amount of cash that banks are required to keep on hand, which limits how much they can lend. By reducing this ratio, China is effectively freeing up money for banks to lend out to businesses and consumers, stimulating economic activity. However, they have yet to specify when this cut will actually take effect. But that's not all. China's central bank is also set to reduce interest rates on existing mortgages and standardize down payment ratios. This is a big deal because the property sector in China has traditionally been a powerhouse, accounting for more than 25% of the country's GDP. However, as we know, since 2020, when the pandemic hit, the sector has been facing trouble. The Chinese government started tightening credit for developers to control rising debt, which led to major real estate companies like Evergrande and Country Garden struggling to stay afloat. Falling property prices discouraged consumer investments, further dampening the demand for metals in the world's largest importer. These new measures aimed at boosting the property market have sparked optimism for a recovery. And that's exactly why metal stocks have surged. There's now hope that a rebound in China's economy will reignite demand for metals, benefiting companies that heavily rely on exports to the region. As the world's largest importer of metals, any recovery in China has a direct impact on global metal industry. For Indian companies like Nalco, Tata Steel, Hindalco, these announcements could signal a much-needed revival in international demand. So while the road to recovery might still be long for China's property market, these steps are crucial in boosting demand, especially in sectors that are so closely tied to infrastructure and construction. With these developments, investors are optimistic that the worst might be over for the metal sector, and stocks in this space could see further gains in the coming months.